Welcome back to Investing Talk Podcast. We're thrilled to have you join us for another focused analysis on what's moving the markets. Today, we're zeroing in on a company that's been, well, squarely on many investors' radar, RLX Technology. We've gathered insights from various pre-earnings analyses, research notes, market commentary, and we're going to try and distill it all down for you. Our goal in this analysis is to give you a clear picture of what to watch out for as the next earnings report approaches.
That's right. We'll be breaking down the nitty-gritty details of their upcoming report. We'll look into their historical performance, unpack those crucial external factors that are really influencing their business, and sort of lay out what different scenarios might mean for you as an investor. It's about getting to the core of what's important pretty quickly.
So if you're looking for that concise yet hopefully comprehensive understanding, you are absolutely in the right place. Before we jump in, just a quick reminder, if you find value in our discussions, please take a moment to subscribe, like, maybe leave a comment.
Yeah, your engagement really helps us bring more focused analyses like this one to you.
It really does. You can also consider buying us a coffee if you appreciate our work. The link's usually below.
And of course, if there's a specific company you'd like us to look into for a future analysis, definitely leave a comment below. Let us know.
Okay, let's get to it. Let's kick things off by setting the stage. When exactly is this report hitting the wires? And what are analysts bracing for? Or, what little we know?
Okay, so RLX Technology is set to report its earnings before the market opens on August 22nd, 2025. And there's also a conference call scheduled for 8:11:00 a.m. Eastern Time that day.
Right. The call is often where you get the real color commentary.
Exactly.
And what about those all-important numbers? Do we have a consensus expectation for Q2 that we should be aware of?
Well, this is where it gets a bit challenging for Q2. Our sources indicate there isn't really a widely published Q2 consensus available yet.
Really? That in itself could be telling, right? Suggests maybe some caution or lack of visibility?
It certainly could.
Yeah.
But we can use Q1 2025 as a benchmark, and it's quite a benchmark. For Q1, the revenue consensus was pretty ambitious, $763.38 million.
Okay.
The actual reported revenue came in significantly lower, like way lower, at $111.35 million.
Wow, from over 760 down to 111. That's a massive miss.
Huge. And similarly, the Q1 EPS consensus was $0.17. The actual result, just $0.02.
Okay, so both top and bottom lines missed by a mile in Q1.
Yeah, points to a company that was, at least last quarter, really struggling to meet projections.
So given that Q1 shocker and the lack of clear Q2 numbers, what about any whisper numbers, anything unofficial floating around? Or has the company itself given any guidance?
Our sources didn't turn up any published whisper numbers for RLX Technology, and that kind of reinforces the maybe lack of strong conviction out there. And on the guidance front, the company has tended to avoid offering specific forward financial guidance in recent quarters.
Right, which, while maybe understandable from their perspective in an uncertain market, doesn't really help investors much.
No, it adds a layer of uncertainty, definitely. Makes it harder to model things out.
It sounds like investors are flying a bit blind here. Thinking out that uncertainty, let's look back a bit more. How has RLX Technology performed historically, beyond that stark Q1? Any patterns?
Well, Q1 2025 certainly stands out with that huge EPS miss, $0.17 versus the $1.17 expected. And while the specific details for, say, Q4 2024 aren't laid out in our sources, the overall trend seems clear. The available information suggests RLX Technology has consistently struggled to meet expectations in recent quarters. It's built up a pattern of underperformance.
Okay, so a pattern of misses. How has the market reacted to these reports in the past? Is the stock usually volatile around earnings?
Oh, absolutely. It's definitely a roller coaster. The stock typically sees significantly increased volatility around the announcements. While we don't have exact percentage moves for every quarter, there's a clear history of sharp reactions. Big moves after both earnings beats, which have been rarer, and more often after misses.
So the market is definitely paying attention and reacting strongly.
Very reactive. Seems like investors are quick to price in any new info, good or bad. Mostly bad lately.
So high volatility is pretty much a given. What about the broader trends in their key financials? Besides just missing headline revenue and EPS?
Well, the most obvious trend is that revenue falling sharply below consensus, like in Q1, and EPS consistently coming in under par. But beyond that, the limited information suggests analysts are, continuing to approach the company with real caution. It feels like analysts might be pulling back, maybe finding it hard to build an optimistic case, given the ongoing headwinds.
So it's not just missing numbers, it's maybe a lack of confidence in the underlying story right now.
That seems to be part of it, yes. A lack of positive momentum or obvious catalysts for improvement.
That lack of momentum leads us to the external picture. Beyond the company's own numbers, what's been happening around RLX during this past quarter? Any major product news or industry shifts?
It's interesting. Our sources didn't actually detail any major product launches or significant strategic announcements specifically from RLX technology during the quarter.
Hmm. In a fast-moving consumer sector like vaping, sometimes no news isn't good news, right? Could suggest they're maybe hunkering down.
It could, or perhaps focusing internally. But yeah, a lack of visible innovation or market moves can raise questions, especially given the pressures they face.
And speaking of pressures, the e-vapor sector in China, that's seen some major headwinds, hasn't it? This isn't just a small hurdle, it's more fundamental.
Oh, absolutely. This is where it gets really critical and, frankly, quite difficult for RLX. The e-vapor segment in China is still facing significant regulatory headwinds, and taxation concerns are a big part of that.
We're talking more than just higher taxes, right?
Much more. It's about regulations reshaping the whole competitive landscape. Restrictions on product types, flavors, stricter marketing rules, limits on where they can sell. It's not just a hit to revenue, it potentially caps their long-term growth. It makes it harder to attract new users, harder to grow market share.
So it's like the rules of the game are fundamentally changing underneath them.
Exactly. It's a profound structural issue for them, dictated by policy, not just a temporary dip.
That's a huge factor. And beyond those industry-specific regulations, what about the broader Chinese economy? How are things like consumer spending impacting RLX?
Well, broader Chinese consumer discretionary spending has definitely been under pressure. There's ongoing macro volatility. So consumers might just be less willing to spend on non-essential items like e-vapor products.
Okay, so maybe tighter wallets generally.
Right. And then there's overall risk sentiment towards Chinese companies. Investors might be more hesitant, more cautious about putting money into Chinese stocks generally, given uncertainties about growth, geopolitics, and just ongoing regulatory scrutiny across different sectors.
So it's kind of a double whammy, potentially cautious consumers and cautious investors.
That's a good way to put it. Demand-side pressure and maybe less capital flowing in.
Okay, so that's the challenging backdrop. Let's pivot to the stock itself. How is RLX actually trading heading into these earnings? Seeing any kind of pre-earnings run up?
Actually, quite the opposite. The stock's been trading weekly heading into the report. In the latest session we have data for, it was down about 2.05%.
Okay, so no positive momentum there.
No, not at all. There's really no evidence of a pre-earnings run-up, which often signals a lack of strong positive market sentiment. The weakness suggests investors are already wary, maybe anticipating another miss or just de-risking.
Makes sense. And given that history of volatility you mentioned earlier, what are the options market suggesting about the expected move after the earnings come out?
Well, while we don't have specific implied volatility percentages from our sources, the general picture from options data is pretty clear. It consistently indicates significant implied moves for RLX around earnings. This isn't a stock expected to just sit still.
So big swings are anticipated.
Definitely. It has a history of double-digit percentage post-earnings swings. So the options market is pricing in a large reaction, whether it's up or down. Traders seem to be betting on volatility itself.
Okay, the market expects fireworks. It's not sure which kind. Let's talk scenarios then. What would a bullish outcome look like for RLX? What needs to happen to get a positive reaction?
A strong bullish case, given everything, would really need a beat and raise scenario. They'd have to outperform consensus, probably significantly, on both revenue and EPS for Q2.
Okay, beat the numbers.
But critically, that beat would need to be backed up by encouraging comments from management. Specifically, commentary suggesting that the regulatory risk in China is stabilizing or maybe even improving. Any early signs of margins holding up or maybe user growth picking up again would be key.
And positive news on the actual regulations or taxes would be huge, presumably.
Oh, absolutely monumental. Any concrete positive regulatory or tax update would be a massive catalyst. Without that external shift, even good internal numbers might not be enough for a sustained rally.
Got it. And the flip side. What triggers a bearish reaction? What are the red flags?
Well, obviously another revenue or EPS miss would likely trigger a negative reaction, but it could be amplified by a continued lack of specific forward guidance, especially if the market was hoping for some clarity this time.
Okay, so missing and staying quiet.
Exactly. Also, any evidence of further margin compression showing that profitability is getting squeezed would be a big negative. And maybe the biggest trigger, any commentary signaling more regulatory or taxation threats are coming, or even just a really pessimistic tone about the policy environment, that could easily spark a sell-off.
Makes sense. So with all of these pieces, the numbers, regulation, macro sentiment, what's the single most important thing listeners should focus on in the report and the call? What's the real needle mover?
I think the most critical thing, the real needle mover, will be any concrete forward guidance on sales trends. Are things stabilizing, getting worse, getting better? But probably even more important than that is any updated insight or commentary on the regulatory and taxation situation in China. Investors are just desperate for signals that that core business risk, the policy risk, is stabilizing. Without that signal, the actual Q2 numbers might almost be secondary.
Fascinating. It really highlights how external factors dominate here. So let's pull back. Bringing it all together, what's the overall lean? Based on our sources, is the outlook leaning bullish, bearish, neutral?
Based on the analysis, the overall leaning seems to be bearish to neutral. The pattern of earnings misses, those heavy regulatory risks we've discussed, and just the lack of any recent positive catalysts. It means the risk feels skewed to the downside right now.
But you mentioned volatility.
Right. There's always a chance for a surprise, and that historical volatility could create short-term trading opportunities for people comfortable with that risk. But the underlying fundamentals look challenged.
And if you had to put a confidence score on that bearish to neutral lean, say 1 to 10.
I'd say a confidence score of 4. The recent results have been consistently weak. There's very little new positive info heading into this quarter, and that lack of guidance really increases the uncertainty. It feels like a high-risk situation.
A 4 out of 10. Okay, so finally for our listeners thinking about strategy, what are some practical considerations depending on someone's risk tolerance?
Sure. For risk-averse investors, the recommendation seems pretty clear. Probably best to avoid holding RLX technology through the earnings announcement. The recent volatility, the high risk of a downside surprise, the regulatory overhang just makes it a precarious hold for someone who doesn't like big swings.
Okay, steer clear if you're cautious. What about those more willing to take risks?
For risk-tolerant investors or traders,
Yeah.
options strategies might be worth considering, something like a straddle or a strangle. These are basically ways to bet on a large price move happening, either up or down, capitalizing on that expected high volatility we talked about.
So betting on the move itself, not the direction.
Exactly. The options market expects a big move, and the company often delivers one.
And for investors who only deal in actual stocks, no options.
For equity-only investors, prudence suggests waiting. Wait for clear confirmation of improved results, or better yet, a significant positive shift in the regulatory environment from China. Until there's evidence of a turnaround or a de-risking event, jumping into the equity directly looks pretty speculative. The current landscape doesn't really favor a buy-and-hold approach here.
It's really striking, isn't it, how much external factors like government policy and the macroeconomy can just completely overshadow a company's own operations. It really hammers home the need to look beyond just the company's financials sometimes.
Exactly. And that raises, I think, an important question for you, the listener. In today's world, where you can find so much information about individual companies, how much weight do you give to these broader market trends, or especially regulatory environments, compared to the specific company fundamentals when you make investment decisions? It's a really complex balance, isn't it? And RLX technology is just such a potent example of that whole dynamic in play.
That's a great thought to leave things on. It really is a balancing act. Well, thank you for joining us for this analysis. We hope it's giving you a clearer picture of what to watch for with RLX Technology's upcoming earnings. We'll be back soon with another look at what's happening in the financial world. Until then, keep learning and keep investing wisely.